Hey everybody, hope you're having a great day and a great week wrapping up. After a really good run up in the market last week, there was some opportunities for profit taking on the bond market, and we would have expected rates to maybe inch back up a little bit, but we really only had one day where that happened, and it was wasn't real significant, but we certainly saw rates go up a little bit yesterday. But all in all, almost every day this week, it's been quiet. Not a lot of moves, but the moves have been in our direction. So from Friday to Friday, week to week, we see rates relatively unchanged from last Friday. Now, some products and some investors are showing rates slightly lower. And I think today is really, we're seeing some positive movement today because coming out of Japan, they are doing what's called a yield curve control. It's a policy, it's a monetary policy that they're enacting to keep things under control. And what all does that mean before getting all into the weeds? The reality is the mortgage rates are going to be impacted on a positive way. In other words, they're going to stay sustained or at their levels or lower as their yield curves are being under control. It impacts the way the global markets want to sort of compete with that. And all that means is good things for us. It's just another pillar, one of the many pillars that impact mortgage rates and the bond market, which impact our rates. Speaking of things that are impactful, next week we expect the PCE report will come in, and that is the Fed's favorite report that they love to see to measure inflation, and we are expecting to see some good numbers coming out of that. Now, the Fed's been talking about they want to see inflation get to 2%, and we're still a ways from that, but we are seeing a little bit of traction and or direction going in that direction. And so we feel like that report is going to be very positive for us. Also, there's going to be some members of the Fed that's going to be scheduled to speak next week. So it's going to be interesting to see kind of what their narrative is and how they approach the reports that are coming out, the jobless reports, jobless claims reports, and those things that have come out in the last week or two. So we'll be watching that. Obviously, we may have a good positive day if PCE comes out the way we expect, and then maybe the Feds will come out and just pour water on that. Who knows? But we're hoping not, and we're hoping that their conversation or their narrative is going to start leaning toward, okay, yes, we're going to maybe put one more rate hike out there, but then that's going to be it. And hopefully that's going to be the signs that the top of this thing is behind us, and we feel like it already is behind us. And so rates will continue to go in the direction that we hope, and we certainly know that a year to a year and a half from now, rates are going to be, hopefully into the fives, maybe in the upper fours, but certainly right now we could use some relief because home prices are up, inventory is down, and you guys know that, and that's pressuring prices and price. I think something came out early this week that noted that the average price for a home, cost of a home, is at the second highest, the peak that it's ever been. And so we already know that. And so, we could use some relief. And if we can get some of that relief through the mortgage market, then we certainly are welcoming that. So thank you for all that you guys do. And if anything we can do for you, get you some pre-approvals and help you with that, get you some quotes, we'd be happy to do that. You guys have a great weekend.